Hello, everyone. Welcome back to Reimagine 2021 version 10. So this is our 10th event, our 10th edition anniversary. We've been doing these virtual conference events for about a year now. And our main goal is to spread education, cover the latest founders and innovators building in the space, and bringing you the latest news. I'm your host, Roshan Mirajkar from the Mousebelt team, and I'm very excited to bring you here a new guest. So with me here today, I have Han Kao, who is the CEO at Sanctor Capital. So Han, welcome to the Reimagine 2021 show. And I think, just to get started, it would be great to hear about how did you get into the crypto space, and how have the past couple months been for you and your team?
Yeah, thanks, Roshan. Pleasure to be here. It's very exciting. I think we're gonna have a lot of fun today. I got into crypto initially in 2013 for the first time when I was running an online ticketing company, and we were facing some of the challenges around payments and finality of payments, where we were kind of batching credit card orders and laying out for tickets, and basically we saw a lot of risks involved in us being that middle layer between the consumers, the ticket buyers, and essentially the ticket producers or the event producers, and that was our first touch. And I had looked into Bitcoin for a little bit. I thought it was really interesting as an emerging idea or technology at the time, but it was, we peeled back a few layers and we just realized it was just not feasible to get people to understand how to set up wallets and whatnot. And so that was my first touch. Just had that in the back of my mind, and been kind of watching it tangentially, but didn't really get into crypto deeply until 2000 and I believe it was 2000 end of 2016, early 17. At that time, I was coming off of an acquisition, and I spent the year being the chief product officer for a large media company out in Southeast Asia. And I had a good amount of time on my hands, and I started kind of diving into crypto, and I got into Ethereum, and I said, wow, this is just insane. This is gonna change the world. And so then I started discovering ICOs, and that really got me really interested, because I started seeing all these insane ideas, some of which are still insane today, but some of which those same insane ideas ended up playing out into becoming top DeFi projects. And so from there, during that time, there was a lot of projects launching and raising, and it was quite hard to differentiate between which ones were real, which ones were going to make it, and which were just kind of fly-by-night ideas, and even which ones were outright scams. And so I put together, at that time, the best thinking at the moment was, oh, well, let me start a fund, and let me try to invest in these projects on a scalable level. And so I put together a little investment team, and we started building internal memos of these different investments at the time. And we sooner or later started seeing that the investment memos and the stories that my analysts were telling me were quite different, drastically different than the stories that the founders were telling, and what crypto media at the time was promoting and also emphasizing. And we were like, well, it's remarkably interesting how different these stories are. So why don't we just start sharing these stories, sharing these investment memos? And we started doing that. We started sharing what we called ICO reviews. And that kind of got a lot of great early traction. And we started rating different fundamental elements of the project. But one aspect that we realized that a lot of investors at the time were, one big factor that everyone was missing was the technology, the merit of the technology, what the teams were actually building, whether or not they had something, whether or not they was just all smoke and mirrors. And so in very soon after we started doing these ICO reviews, I came across a person by the name of Andre Cronje, and at the time I was working with a project called OneChain, and someone had pointed me to a code review that he released about OneChain, and it was a scathing code review, and I said, oh wow, and I read through it and I was like, wow, this guy really has a really deep understanding of the inner makings of blockchain technologies, and so I read through all his other code reviews, and they were spot on, and they really told things from a very objective point of view, on the quality of the code, the people that were building it, and what that says about the people that were building it. And so I reached out to Andre and I said, hey, we do these ICO reviews and ratings. We're not able to get insight on the technological layers of we're able to do these team analysis and the SWOT analysis, basic fundamental analysis, but we can't really get insight into the technology aspect of things. And I said, would you be interested in producing code reviews and working with CryptoBriefing on helping to share this information and allowing other investors transparency and insight into the technical merits of these projects? And so he said, yeah, let's do it. And so what we started doing is we started releasing our ICO reviews, and we combined them with these code reviews. And that just kind of took off. People really, really loved that. People started really regarding these reviews seriously. And soon from there, we ended up having a lot of investors, institutional investors, reach out to us, asking us for consulting services, for more reviews, for different reviews, for more projects, and we were just kind of constrained and this was probably the last thing I wanted to do as a business. I was just coming off another media company, and it's not fun running a media company. It's very, very hard. There's no glory in it. It's a lot of long hours. And I thought hard, and I said, do I want to? I had to make a decision. Do I want to continue my plan of being a VC, or do I want to pause on that and build out this media company with that gave people more insights on these different projects? And so from there, we decided to basically put a pause on the fund, and we kind of saw that there was maybe like a 1 to 2 year window where there can be we can actually make it, build an upstart crypto media company that was honest, objective, and gave a deeper analysis into what was going on beyond these top 3, 4 coins that everybody all the media was talking about, but nobody else really had the resources. So that was kind of the start of CryptoBriefing.
Yeah, that's awesome. Thank you so much for sharing that story here with us today. I think it's really important because rarely is it the case that most of the technology and innovation in the crypto and blockchain space that just comes out of a vacuum. There's always reasons and like different steps. So like, what can you tell me from what you saw before to now in terms of like how important is the role of media in general now? Do you think the space has been more matured, or because the space is so driven by retail users? So how do you sort of think about the importance of that now?
Oh yeah, I mean that's a really loaded question. There was a lot of and that's a great question, and that's kind of why CryptoBriefing exists today. What we saw was a huge problem. What we saw was just a misalignment of incentives amongst crypto media, and we saw a lack of regulation, a lack of recourse, things that traditional financial media would never dare do. We saw crypto media doing back in the day, right? And so I say back in the day as if it's a long time ago, but that was just 3 years ago. So as a journalist, as a publisher, you have a fiduciary responsibility to your readers. However, the financial incentives of a crypto media company does not allow for that, and does not actually motivate you to align with your readers. Essentially, your readers are your product, and your traditional way of making money from a media company is through advertising, right? And so we all know that today, and at the core has to be an understanding and a desire to actually do good and be a good actor. And that can be selfish. You know, the way we saw it was that, well, if the entire market never matured beyond this, you know, let's push our own bags kind of mentality, and it continued moving on that way, then this industry would die off pretty quickly. It would be written off as a scam rather quickly, and we started seeing that happen in 2018, right? But if you believe in the long term of blockchain and its ability to change the world and allow the world to work differently, then and you feel that you can be aligned on the potential gains in that way, even on a selfish level, then if you can build out a team of journalists and reporters and researchers that also believe in that long-term game, and then you can start, you know, you can basically build a media company with those values and that type of alignment. And that was one thing that meant a lot to us when we hired people. And we never did any op-eds. We never did contributed stories, and that probably hurt us a lot when it came to traffic, because, you know, the more articles you put out as a media company, the more traffic you get. But we just couldn't control it. We couldn't really understand these contributing writers deep enough to understand what their real incentives and motivations are. It required a really deep understanding of the person's character for us to be able to trust what they were writing on our behalf, and on behalf of the brand. So that meant a lot to us, and we spent a lot of time and a lot of money, and probably moved a lot slower than other media publications, because these were the things that were important to us.
Yeah, definitely. No, I think those are all really great points, especially about aligned incentives that people talk about in crypto so much, that, you know, crypto and blockchain is supposed to realign some of these incentives to encourage people to act in good faith, right? And I think a lot of the systems are designed in that way, where you don't get rewarded for being a bad actor. It's more costly or computationally expensive, different things like that. But yeah, I just think in general, it's interesting how media is still pretty important to the space, as far as, like, you know, the technology is really great, but without awareness and also education, it's quite tough. So what are some of the things, have you seen any differences with I guess the way founders are building, you know, compared to the last bear market to now? Like, what are some of the important foundations that you think, like, that are different for someone who's a founder in crypto compared to the traditional ecosystem?
Yeah, absolutely. You know, and I think the bar, it's a really good question, because the bar is just set so much higher. You know, in 2017, 18, if you had a white paper, you had a crazy idea, everybody wanted to make an investment into the next Bitcoin or next Ethereum, and that was your story, right? That was your big carrot, you know, you're on the stick, and that's what got people to invest into these awful. Some of these projects are just awful and unrealistic, and the bar is just set so high today. And as a founder today, you've got to really have a deep understanding of the domain of which you're operating in, and you've got to be able to prove that. You know, you can't just kind of have a year of crypto investing experience and be able to come out and say and raise, you know, 10 million bucks, or at that time, you know, hundreds of millions of dollars on an idea. You've got to show that you've got skin in the game, and you've put in your time, and you really understand that particular subsector and the problem that you're looking to solve really, really intimately. And you've got to have a little bit of traction. You got to have, you've got to start, you have to have the ability to prove that you've got the beginnings of a product that will be used and adopted. And, you know, and you know, because you're competing with investors that are thinking, well, do I just invest in the top, let's say, DeFi winners or NFT platforms that are probably going to get me 10x over the next 10 years anyway, versus investing in something that may never get traction for maybe a potential 50x or something like that, right? And so most investors these days, unless they have, they have a very, very speculative nature, would rather invest in something that's proven and will get them that 10x. 10x is a lot in traditional, in investment markets, right? And so the bar is just set so much higher these days, and founders are and their proposed solutions are scrutinized so much more so, and there's just more data, there's more information, there's more research available now, and investors have just gotten a little bit smarter. And every wave that you see, you're going to have a new generation of investors come in and lose a little bit of money because they made some really bad, expensive mistakes, and then they'll learn these mistakes and they'll start being able to respond accordingly with their future investment decisions. And so I think we're at that point with that last bull run has really educated a lot of investors, and they are looking at everything with a much keener eye.
Definitely. The structures, the financial structures are quite interesting, like you said, compared to the last like bear market. I think a lot of VCs learned a hard lesson of not wanting to accept just any random tokens that they didn't have control of, really, because the projects had control of it, or even just the free market, where we see things like Uniswap and different tokens right now, similar models. And now we have things like governance and so on. So what do you think is really the metrics to look out for? After this, I want to learn a little bit more about what you're building now, which is Sanctor Capital and the program that you guys are starting. But just from your point of view, like, what are some of the important metrics that you think like VCs are going to look for? Would you look at the network, the number of users, or like things like intellectual property, does it even matter if everything is open source, so to speak, now?
Yeah, so I think some of the top, on a very, very high level, you're looking at TVL, right? Total value locked. But that's not a very accurate, metric, as it kind of fluctuates quite significantly with the rest of with the value of the assets being locked. And so you kind of need to look at things relative to each other, and kind of constantly compare things relative to what is successful in this market today. I think it's a real sign of maturity that things like revenue that a project is generating is starting to become a metric that we can actually even begin to look at, because in 2018, 17, it didn't really matter. It was just all ideas, and how big can this thing be? But now you can actually see and understand whether or not a project or a company is able to throw off revenue. And I think revenue, the ability, is probably one of the number one proxies of value creation. Does someone value does the market value your project or protocol enough to part with their tokens or their crypto in order to use your project? And of course, if you take a step back further from there, it's users, right? Users are the very beginning of what could potentially be revenue extraction or value creation further on, later on down the line. And then if you take a step even further from that, kind of starts with traffic, right? If you've got no traffic, and you're a consumer facing app, then what are you? You're still just an idea that's yet to be proven. So these are kind of some of the ways that we try to look at initial early traction, and it's got to make sense, right? Like, is there a big enough problem? Is it a problem? Is it, have they done their customer development? Have they done the customer surveys and asked their users if this is really a problem? Is it a vitamin, or is it a painkiller, right? Is it a problem where people are actually really concerned about and would actually change their behavior over, or is it just kind of like, it's nice to have, and maybe I'll take my vitamins one day, maybe I won't. And so we try to kind of bucket our potential, thoughts on, each opportunity by looking at it through these lenses.
Definitely, those are all important metrics, and for those of you watching, you should pay attention to this because it's vastly different from like traditional VC, traditional startups. Some things are the same, things like revenue, but other things are quite different. You have projects that can get total value locked, like insane numbers compared to traditional finance, where that would take many years. But now I have a few other questions on DeFi and different things like that. But I definitely want to learn more about Sanctor Capital. I know you guys recently launched last month. So tell us a little bit about why you're launching now, kind of your thesis and your framework for the founders out there.
Yeah, for sure. So with Sanctor Capital, it's kind of it's an extension, or it's kind of a it's following along the same thesis as we had with CryptoBriefing, right? And so we started off CryptoBriefing with the thesis of we wanted to bring attention. We wanted to bring attention to the good projects and make the bad ones go away, so people stop investing into awful projects, and the capital flows into the good projects, the ones that are supported and being built by good actors and good founders and strong founders that are missionary. And the overall thesis behind the overall mission behind Sanctor Capital is to invest in missionary founders. And I think John Doerr from Kleiner Perkins makes a really significant distinction between mercenary founders and missionary founders. Mercenary founders are founders that are short-term focused. They're prioritize financial wealth, aristocracy and glamour over creating long-term value. They prioritize financial statements over value statements. And so we're looking to back missionary founders, and it's extremely challenging. Most crypto founders are first-time founders. And, I've been an entrepreneur for about 20 years, and it is not easy being a founder, let alone a crypto founder, where you are building in a space oftentimes in which you have no control over the success or outcome, or you have much less control, because a lot of that is dictated by the ebbs and flows in the market. And even with CryptoBriefing, we nearly went out of business in 2020. And that 2020 was a very hard year for us. In Q1 of 2020, we were at the end of our runway. We had 2 to 3 months of runway left, and I basically went to all the senior, our senior execs and say, hey, we've got to cut. We got to make, cut payroll. We need to start conserving. And this bear market was not, showing any signs of turning around. And we lost a lot of, good chunk of our management and our team. And we had to rebuild from scratch and basically understand that whatever we were rebuilding may not matter in 2 to 3 months. And it was very fortunate for us. We got very lucky that that the world turned around. I mean, unfortunately, COVID happened, but this triggered a series of events around the world that allowed the world to start looking at the world that we live in very differently, and rethink about what truths that they had assumed to be truths, or and reconsider whether or not they really are what they have been represented to them all their life. And being able to manage your own psyche and your team's psyche throughout these kinds of events, it was probably one of the hardest things I've ever had to do. And I've I'm a 20-year veteran in as an entrepreneur, and I can't imagine what it's like for a lot of first-time founders working in live markets where, as a private company, we don't have a valuation until we go public or we get acquired. But you are constantly being evaluated by the market and judged by the market based on your token price. And so you're startups, but you're a public company at the same time. And so, when we started Sanctor Capital, we wanted to do something differently. First of all, let me just kind of preface that with, I wanted to take a step back from full on operating. I'm tired. It's been a long journey. I've learned a lot of hard lessons, and I wanted to take a step back, but I wanted to be able to share my lessons and our team's lessons, and apply them and share them with the first time founders or any of the founders that we're backing, and help them navigate some of these really difficult challenges and problems that face that are unique to crypto founders, that maybe are different from the traditional challenges of being just a startup founder. And we but at the same time, the way a fund is structured, the individual members of a fund, the managers, are not really incentivized in the short term when it comes to KPIs to support founders. They're set up to deploy, analyze, evaluate, and deploy. And so founder support is kind of a it's something that's completely kicked to the curb and forgotten, especially during bull markets where everyone's so busy. It's just about deployment, and you're judged based on how much money you deploy. And so we wanted to create a different type of fund, where we not only were we bringing in only high value investors, but we were setting it up in a way where we can scale our support to the founders that we were investing in, and that's kind of where this Y Combinator mentorship model kind of came into play. And we said, well, what if we surrounded ourselves with all strong founders, people that want to give back to the community, want to give back to the next generation of crypto founders, and lent their support, and we structured it in a way where they were incentivized to support these founders and guide them through these difficult times, and so that's what we did. And so we just launched our first cohort last week, and we're basically looking to launch one new cohort, but not kind of be we don't want to be a factory. We don't want to be launching cohorts of 10 or 20 at a time. We're looking to do 3 or 4 every 2 months, and almost be their partners and their an extension of their team, where we can help them in a more intimate level and really be able to dedicate our resources. And we've got about 30 strong mentors right now committed to supporting these early stage candidates in our accelerator, and we want to make sure that they really succeed in achieving their mission and their goals.
Yeah, no, I'm really excited to speak to you here today, and I think someone like yourself, a veteran, you've been through a variety of crypto stories. Like, this is definitely the right model for crypto, because just cutting a check and then walking away is not going to breed success. And it's a very collaborative industry as well. Even here, we're chatting today virtually. People are always connecting with each other. And I think that's also an interesting thing. There's not always competition vertically across all the sectors. Sometimes another startup that you're competing with is building on the same chain. So like the other things, you're competing with community and other aspects, but it's not really like the traditional world where you have to build, one person's infrastructure alone may give you like a competitive moat. So I thought that was interesting as well. Yeah, really excited about your mentor program. And for everyone listening, for all the founders out there who have projects, I definitely encourage you all to get in touch with Sanctor Capital, because mentorship is honestly underutilized in the space. We need more of that. I think we need like smaller VC funds that are providing more mentorship than really large funds where like the people just get lost and are thought of as products. It's quite tough. What can you tell me about like some of the maybe interesting like verticals or sectors that you're interested in, like just for people applying or getting in touch? Like, are you more interested in finance right now, the future of finance, like uncollateralized loans, infrastructure, or is it just everything, including consumer apps and stuff like NFTs?
Yeah, we're open to this across the board, but we're big believers in a multi-chain universe. So scalability, interoperability, we think are going to be big themes in the next few years, and continue to be big themes. I think we're seeing layer 2 projects playing even more integral role in as competitions between blockchain build up. We're very excited to see life exist outside of Ethereum, on BSC or Solana or Flow. We think there's a lot more improvement that can be had with cross-chain communications, and that needs to be a lot more efficient. And we want to see more developments there, and as the stack increases, we're going to see more data. As the stack increases across different chains, across different layers, we're going to need to see more tools for visualization and management of this data. We're going to need to see more DAO tools. We're going to see more DAO infrastructure management, right? Payments, management of payroll for DAOs, treasury management. We're very excited to. We actually have one project in our recent cohort that's working on that, and where of course DeFi, in the emergence of DeFi and TradFi. We're starting to see a little bit of the beginning days of that, right? We see Compound starting to cater to institutionals, and Aave will soon follow suit. And MakerDAO has a vote a vote for. I can't remember what they just it was treasuries, or they basically started integrating traditional assets into their vaults, and yeah, so I think and NFTs, I think NFTs kind of just went through the same ICO boom as we saw with crypto in 2017-18, and that was kind of like the first big hype. But I think it'll take time. It'll take a lot of time for people to understand what an NFT is and peel back the layers of where the value is, and and have usage and utility as a technology. And so I think the emergence of NFTs with art and collectibles is just kind of the tip of the iceberg, and we're seeing that draw down by 80% or so now, right? But and that's kind of like why I'm kind of comparing that to the 2018 days. But I think the real value curve is going to happen over the next 5 to 10 years as we see NFTs get utilized in games and gaming and metaverses, and I think that's when you think about how we how we spent our money as Gen Gen Ys or Gen Z, Gen X's, and the millennials, that's continuing to shift towards the digital economy, right? And so people value experiences, people value digital, and so it's easier, it's faster, it's more convenient, it's more efficient, and so I think some of the boomers maybe a lost cause. We need to wait until the millennials and the Gen Zers start coming to the capacity where they can really start understanding how to utilize these NFTs in their daily lives, and for those applications and for those products to be there for them when that time comes. And I think that's very exciting for us as well. And so NFT infrastructure plays as our big portion of our thesis. Yeah, these are just some of the things. Could probably talk to you for days about this.
Yeah, no, that's really exciting, and I think technology rarely stays stagnant. So I think this was a great way to end this segment off. And lastly, I want to give you a chance to tell people how can they connect with you, your team, any websites, and maybe even apply to be part of Sanctor Capital.
Yeah, absolutely. We're out there. We're everywhere. You can, there's a form on our website at sanctor.com. You can tell us a little bit about what you guys are working on. We're happy to get on a call with you. My Twitter handle at Hankao, HANKAO. Send me a DM, and I'm pretty responsive to anything that comes in. And so, yeah, we everything for us starts with a conversation. We may not support right away, but we're always very quick to respond and engage in an initial conversation, understand what you're working on, what your mission is, and how you plan on executing on that mission, and most importantly, how we can help you. It doesn't make sense for us to engage in projects where we can't bring value. Otherwise, we're just dead weight, and so we never want to be dead weight. And so it's important that there's a good fit. But yeah, reach out to us. We're always open to start a conversation.
Well, folks, you heard it here first from Han, and yeah, wishing you luck at Sanctor Capital. Looking forward to having you back maybe in a couple months and see your progress. Thank you so much for being here today.
Would love to. This has been so much fun, Roshan. Thank you so much for having me.
Thank you, Han. And for the rest of you, stay tuned. We're bringing you more interviews from founders, innovators in the space, the latest news. As always on Reimagine 2021. Stay tuned for the rest of version 10. Thank you.